Hi there, welcome to this week midweek market analysis. So this week here will be interesting because later on in the midnight we do have the upcoming FOMC meeting minutes. We do expect greater volatility for this particular meeting because general consensus over here is that traders are expecting a 0.25% hike. But there's still that possibility where the Fed might come in and give a surprise of 0.5% hike. So with that, the market are definitely going to be more volatile if there is a surprise element coming from this event itself. So as we are looking at the technical setups and some of this analysis over here, do take note that things can change fairly quickly if there's a surprise element coming from the Fed during this FOMC itself. Right, so with that said, let's take a look at some of the charts over here. First up, we have the dollar index. Yesterday, we did get a decent break above 102.20, but the market kind of did a pullback retracement right now. So overall, we're still maintaining a slightly bullish perspective with the expectation of a retest back towards 103.60. And of course, for the dollar to strengthen, suppose if the Fed give a surprise 0.5% hike, that might give us that catalyst to push the dollar stronger, and potentially this would then play out towards 103.60. Now alternatively, of course, the idea over here is that this seems to be potentially going into a corrective structure as well. If that's the case, then obviously our bias wouldn't be much of a bullish anymore, and we want to look for more sign and see if perhaps the dollar can then continue to weaken if we get a decent correction over here. But for now, we're still maintaining a slightly bullish point of view. Okay, but of course we need to be adaptive enough and quick to kind of review our analysis and our directional bias as the market develops. Now on the other side, we have the euro dollar. Okay, so what we're seeing over here right now is that we do have this little diagonal cross structure as well. The market broke off the low at 1.0855 yesterday, but quite similar in terms of the dollar index of what we're seeing. This can still develop into a corrective structure, one more push up before maybe another move down. So while we are holding on to a slightly bearish perspective with the expectation of coming down to 1.0710, again, we need to monitor how the market's going to develop from here, especially again we have the FOMC coming in. Right, so that's on the euro side of things. For the pound dollar, we are seeing a decent setup building up right now. Okay, the market is doing a very decent and nice little three-wave structure, WXY. Potential completion zone will be somewhere around 1.2240, which is also a very decent channel structure, and we'll be utilizing a potential stop at 1.618 extension, which put us around 1.2125, and we'll be looking for a buy setup around this completion of a three-way structure with a target at 2450 and a stop at 2125. So overall, I think pound dollar is presenting a pretty decent setup over here, but of course, do take note of the news event as well, right? Because if the dollar strengthens, then this might just probably push through, and this trade may not play out if that's the case. Okay, but if let's say the dollar comes in strong and then after that the press conference can send the dollar the other side, you can get a rejection from there. That will be a pretty decent trade for this. Okay, so that's on the pound dollar. And in terms of Aussie, okay, yesterday we get a decent break of this previous low. If you manage to take that sell trade, it will be a good time to shift your stops to break even to protect this, and we're still continuing to expect more downside potentially towards 6875. So most of this major pairs here, we're generally holding a bullish perspective on the dollar, but again, it's not the best, it's not the clearest. There's a mix of it. Some of this pair here is suggesting a strengthening of the dollar, while some pairs here are more towards the downside. Okay, so during such situations like this, we just want to be careful, and of course, we need to accept the fact that there is no 100%, there's no certainty in trading, and all we do is just simply manage our risks along the way, okay, and ride on in terms of the setup, they have a higher probability. Okay, so Aussie dollar over here, I'm personally still holding on to that short. I've shifted my stops to break even, and I'm still looking at 6875 as my potential target. Okay, dollar Canadian over here will be maintaining a neutral bias. Okay, the market kind of giving us, or I would say gave us, a V-shaped formation. So right now we just maintain a neutral perspective. Wait and give more time to the market and see what the next structure development is going to be. Okay, so this one here, nothing much, we just leave it aside for now. Dollar yen, we might get a potential nice setup going into FOMC as well. Okay, right now we're seeing this corrective structure. We have this little trend line over here. If you can get an impulsive break in line of the release of the statement and the interest rate, especially below 129.70, I think that will be a very decent trade with a target at 126 and of course a protective stop just above 131.10. This trade over here, I would say is one of the better ones because the structure of this from a technical point of view is quite clear. We get an impulsive move, a corrective structure. This usually suggests more downside. Okay, so do keep an eye on dollar yen. This might give us a decent news trade opportunity going into FOMC too. Gold, I'm holding a neutral perspective. Yesterday we did get a decent break, but I got out of break even because this little impulse move, I've shift stops to break even. The market got pulled back quite sharply, and I got out of that trade itself. So gold for now, I'm maintaining a rather neutral perspective because this can easily turn into a structure like that before that drop. So I just want to give it more time and wait for a clearer setup before committing to any particular trade itself. Okay, so gold over here, neutral. Crude oil, we're still overall expecting more downside. Okay, with this little structure of a 1, 2, 3 mini triple top, the market came down impulsively. This little retracement looks pretty sharp. Okay, but if you have any sell trade, okay, it should be already in a risk-free position. If we can get a decent corrective structure from here, then of course we still expect more downside. But the overall structure, the bigger point of view, we're still maintaining a bearish bias. Okay, so over here, any potential pullback or any setup that give you a sell will be a decent one too. S&P index, overall we're maintaining neutral perspective. The market did a little reaction off that fib level, but yesterday bounce was pretty sharp, kind of V-shaped formation over here. So we'll give it again more time to see how it's going to develop before committing to any particular trade. Okay, another one that I just want to quickly highlight is Euro Pound. Okay, Euro Pound current price point is testing a 618 fib. Retracement as well as confluencing at the top of this little channel over here, which may give us a decent opportunity for a sell, okay, to complete this ABC structure. So do look out for a setup around the Euro Pound area as well, at this point at 0.8815. Potential stop can be above 8850, and of course your target right now, what I'm looking at, is 8680. Right, so Euro Pound is one of the other setups to look out for. And last but not least over here, just to mention, is on Bitcoin. Okay, we're still seeing this little crawl diagonal setup. The market did break below that trend line a little bit, does a little bit of retest. If we can get an impulsive break below 227650, we might get a short-term sell opportunity with a target at 20465. And a protective stop just above 24065, or if you're more aggressive, you can just put a stop above this little high. Right, so that's on Bitcoin analysis too. So good, all the best for your trading for the remaining of this week. Again, a reminder, do manage your risk, take note of the upcoming FOMC event, and I'll see you guys in the next one.